children, take them away.
And a warm welcome to one and all. This is your first time here? Big fella, that is the Scruffy Trader. What I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, do take a second to hit that little subscribe button. Genuinely helps. And if you find value, smash the like. So what I'm going to do is I'm going to jump on the whiteboard. And I'm going to give you something to think about. It's kind of a process of working your way into a trade. And hopefully it might sort of put a little light bulb moment in your head. So let me jump on the board and we'll have a chat.
Well, we're waiting.
Okay, guys, I'm going to give you a few pointers on the way a framework operates. Now, everything you see me do is based around a framework. When I'm talking about GoldenEye, it is a framework to the chart. When I talk about the river, it's a framework to the chart. Because there isn't such a thing as strategy. Well, there is. It just depends on the way you look at it. See, most people think strategy just means X marks the spot. It doesn't. What strategy is, it's understanding what you're doing. And if you don't understand it, then you're lost. But what do you need to understand a strategy, a framework? So let me give you a few pointers as to what to look at. And then from there, when you see me talking, it might make a little bit more sense. So the first thing I ever look at is what I call an anchor chart. But in the industry, it's a prime chart. Okay, so your prime chart. So number one, you need a prime. All right. What is a prime? Well, a prime is your primary chart, as it exactly says it is. It's where you look to get your information. Now, this can be anything you want. You know, you personally, in day trading, I prefer a 1 hour. Why do I like a 1 hour? Because it's slow enough to show me a lot of data, but it's fast enough to show me what's happening right now. Now, it's based on an ATR, and the ATR tells me kind of a filter as to what my prime chart is, my anchor chart. All right. So the next part of this is the ATR. Okay. So the ATR has two functions. One, it can tell me originally what the prime chart is. And the rule of thumb that I have, if it is over 75, it is an hour. If it is below 75, it is 4 hour. Why? Just the speed of the movement, that's it. But why is it second in the list? Because you should know what your prime chart is to start with. Secondly, you need breadth of market, how wide the market can go. Okay, so that gives you sort of your boundary, wide. Okay, so the market can go up there or it can go to there in the given day. So what you've done to start with is you've created also a trading arena. This is where the market is going to work today. Maximum point, lowest point. What do you do next? Put your levels in. And you want levels. Okay. So in this instance, you have a 1 hour chart. You are drawing all of your levels in. And if you remember, your levels have to be key high time frame levels. Okay, go through the foundation, you'll see which levels I put on, but they're next. Okay, then what do you look at? Well, you need to look at the price itself. What is the price doing? So the next question is the price. What's that important? Well, you need to know where it is in relation to the levels. Okay, is it sitting here? Is it sitting there? All right. Why is that important? Well, it tells you how good or bad your trade is going to be. What does that mean? Well, if it's in the middle here, it's a good trade. Why is it a good trade? Because you've got a good pocket of air from there down to there. Right? So at that moment, doesn't matter what your analysis is, you've got a decent movement. The second one is not as good. Why is it not as good? Because your analogy has to be in a single direction. This one can be either. This one can only really go up. So whatever your analysis is, it has to be up. Why? Because that's the pocket of air. If it's going down, it has nowhere to go. It's going to hit a solid level. So in that instance, it helps filter down what you're looking at. Okay? So you can see what the price is doing. All right? Middle level, cool. Then you need your indicators. 5 indicators. Why is that important? Well, the indicators now start helping you build a thesis, an idea. Okay? Now, we already know, looking at the price in its current situation, I can only really go long, because if I'm going short, I have to wait for it to break the level. And then I would only be going short if it breaks the level. All right? So this is where the indicators come in, because they help build up that idea. And simple as that. But then how do you form the idea? Well, you do it through multi-time analysis. And your multi-time analysis is +1 -1. So 6. Multi-time. So what's multi-time? Well, let me show you. Multi-time is this. Simple as can be. I am 1 hour. What's happening here? Well, everything says it's going up. Score 1. I am looking at a 4 hour. All right. It says it's going down. So it is now neutral. One's cancelled the other out. 15 minutes. What's happening here? It's going up. So I've got 2 up, 1 down. So we've got a vague idea this thing might go up. Then I need to confirm it. 5 min. It's going up. So in this sort of situation, we've looked at the price. I was only looking for longs. Now my indicators, depending on which ones you choose or which ones you like, 3 of them are telling me it's going up. 1 of them says it's going down. So if it's at a level, price is here. We know levels hold price. We know indicators can help guide our idea. But if we've got it all mapped out fully, and that is your equation, you have a safe trade moving up. If that one, for argument's sake, was down, it's neutral, because you've got 2 cancelling each other out, and then you don't have a trade. Simple stuff, guys. Simple stuff. But that is a very watered way of planning out a trade. Okay? Now, if you understand it, fantastic. If you don't, by all means, come down the Scruffy Squad. I'll show you the indicators I use, why they're used, how you map the chart out fully, but more importantly, how you gauge the price to enter at the right time and gain your profit. So, very quick sort of watered version for you, and I hope it helps. Do drop in the comments below, because I'm always interested in your thoughts. And as always, guys, trade well, keep your risk managed, but above all, do what you love. and the money will follow. See you all in the next one.